Well, hey there, everyone. Happy Thursday. Welcome to our monthly hot seat call here in the Badass Moneymakers. I'm very excited. We have Colleen, one of our Badass members, is going to come on with us in just a few minutes. I think we're having some tech issues getting her on the stream, but we are going to get her on the stream, hopefully, and bring her on for the hot seat. I wanted to pop on real fast with just a couple of like admin updates and type things like that. So we've got a bunch of new members. Welcome to the Badass Moneymakers. Thank you so much for being here. Oh, perfect. I see we've got Colleen coming on right now. So I'm just going to do my my kind of like admin updates, and then we'll bring her on for the hot seat. So if you are new, just to give you a lay of the land, and for current members too, a reminder, the first week of every month, we always do some kind of workshop or training. And that's usually about an hour, sometimes a little bit longer than an hour. This month, we did one on 1099s, Form 1099. So if you haven't checked that out, definitely look at that. And if you miss a workshop or training, you can't attend live, we put all of the past recordings into the membership portal on Kajabi. So even if you weren't a member a few months ago, you'll still have access to those past recordings as well. So go back, check them out. There may be a topic that's relevant for you. That's week number one. Week number two, we always do a Q&A. So this is a great opportunity for you to hop on, ask me all of your biz money questions. They can be related to whatever the workshop topic is that month, but they don't have to be. They can be about anything that you need help with. But these are shorter Q&A style questions. So I always recommend that folks kind of keep them very specific. I think that helps move us along. And then week three is the hot seat, which is what we're going to do today. And actually, I skipped over the Q&A thing. I'm going to pop up on the screen real fast here. If you do want to submit a question for the Q&A sessions the second week of every month, you can do that by going to megkwheeler.com/QA. And if you want to join the hot seat, which is the third week of every month, you can do that by going to megkwheeler.com/hot seat. And the biggest difference between that Q&A and that hot seat is that Q&A is a very specific pointed question. You're not necessarily coming on camera. You're just asking the question. I'm going to answer it for you. Versus a hot seat is truly one-on-one coaching. Depending on the number of people we get, it might be 15 to 20 minutes. If you're the only person who signs up, you'll be here for the whole hour. So it really just kind of depends on the week. And that can be about a specific challenge that you're trying to overcome in your business. It can be something you're planning for, or a system you're trying to put into place. Whatever it is related to the money in your business, hot seats are a great way to work through that. The last week of every month is our implementation week. So we don't have any event the last week of every month, just an opportunity for you to catch up on that workshop, go back and watch the Q&As or the hot seats, which even if you don't ask a question or you don't come on the hot seat, I still recommend you check out because they can be super helpful to hear kind of what other people are going through. And the way we've got them, I know in the Facebook group, I'm not sure if we have this on the membership portal, I'll check, but I know on the Facebook group, we've, every time we have a Q&A, we'll put the questions in kind of the description of the post so that you can see what questions get asked. So if it's relevant to you, you can go watch that Q&A. So that's what I'd recommend you do that fourth week. So just coming up here, we're in January of 2021. For anyone who's watching this kind of live or reasonably soon after, next week is our implementation week here in January. And then we will come back here for our for our workshop of February on Wednesday, February 3rd. We typically do those workshops not every Wednesday, the first Wednesday of every month at noon Eastern. We do our Q&As the second Wednesday of every month at noon Eastern, and our hot seats the third Wednesday of every month at noon Eastern as well. So, all right, I'm going to leave that there. Let's go ahead and bring Colleen on. Hopefully we can get her on. And Colleen, if you can hear me, which you may not be able to hear me, I need you to add your audio and video. Okay, perfect. Colleen, I need you to add your audio, turn on your audio and video so that I can add you to the stream. Yes, perfect. Thank you. Okay, I can at least, you're in the stream now, Colleen. I can hear you.
Yeah, I can't. It just says I don't.
Oh, I lost you. I think hold on. Let me add you back. What does it say?
It says I don't have a camera, but I think technology is, my beast. So
that's okay. We can hear you.
So you don't get to see my cute smile. And I actually have like a big, where I accidentally like put a stick near my eye, so I have a big scratch on my face. So
Oh,
I don't think I
no.
can do the camera, but
That's okay. But you can hear
yeah,
me?
I can see you. So
Okay, perfect. And we can hear you. So welcome to, I think this is your very first hot seat in the membership. So welcome. And you had asked about, I'm just going to read what you put, and then if you want to change it, by all means, or if you want to add on. But you had put when you signed up that you want to focus on forecasting and growth. You said, I'm trying to figure out what I need to have in place for going to the bank for a loan or looking at a silent investor option to expand the business. Now, I know what your business is, but just for everyone's sake, would you mind just giving a quick, 30-second overview of what your business is?
yeah, I mean, I consider myself a herbalist primarily, but I do have a brick and mortar apothecary where we sell bulk herbs and teas that we make in crafts, which we also have a wholesale division, and we sell online. And I also teach. So it's a multifaceted fun thing.
Yes. Perfect. Thank you. Okay. So forecasting and growth, because you have said you either
Yeah.
want to go get a loan or you want to get an investor. Tell me a little bit about what's going on and kind of what help you're looking for today.
Okay, so I always feel a little bit like saying this, but we had our best year ever.
Yay!
We implemented, so I actually have, I was like paying attention to the taxes. So I'm like, I've never had to pay taxes before. So we've been in business about 5 years. And honestly, I am what my very heart-based business owner, but like what my heart is telling me is that people love what we're doing and want more of it. And if I can tap into that and create a business that is scalable, we'll be able to spread the message. And our message is always like connecting people to plants. So really having them learn about the plants at where they're at and then helping them get to the next level through whatever modality we possibly can. So there's been a couple interesting conversations, random, but interesting conversations with some friends who said, have you ever thought about taking it to the next level? Because what I'm doing right now is good, but part of the reason it's doing really well is because of COVID and because of what I do. If we go back to the pre-COVID numbers, we were squeaking by, you know.
Yep.
So I think we just need to build. Our audience has built. Our audience is larger, but what we're doing isn't big enough, and we actually are out of space at our current place for shipping orders and making stuff. So we really need to invest in some infrastructure.
Awesome. Okay, so couple of things. First of all, you should absolutely own the fact that this was your best year ever. That's incredible, and I think that's something to be really, really proud of. You mentioned that you said a couple of times in a few different ways that you really kind of want to grow the business, you want to scale it up, that this is you have the opportunity now to really go bigger. And you mentioned running out of space, you mentioned needing to ship more orders. Is there a particular part of the business that is really taking off right now? Is it the physical products? Is it, because I know you do the products, you've got workshops as well and teaching. Is there one part of the business in particular that is really booming?
Yeah. So in what we ended up doing when COVID hit is we started an herbal CSA using it's a monthly CSA that they get products that I craft. So it's not it's stuff that I make inspired by the season and also what is going on. So obviously the last 9 months have pretty much been like for stay healthy and sane. But also inspired by the season. So so that has gone from 40, which I felt like was a blowout, to 60, which I felt was a blowout, and then we just renewed it, and we're doing it in 3-month segments. And we just renewed it, and we have like 90 something people, and I have people that already want to renew it. So for that gives us cash in the bank. I haven't really run the numbers on profitability yet. We're really trying to hone in on how long it takes for everything.
Good.
But before it was all just kind of like, okay, I guess we're doing XYZ. And so now we've kind of honed it in, and I have some strategic plan, you know, like I feel like it's such a great, I'm really excited about it. 1, 2, it's such a great product because it's accessible and I have like a community behind it. So, you know, we do live Zooms. They get to learn from me. They get percentage off of the shop. So it's an easy way for me to kind of grow our business. Not easy, not necessarily easy, but it's a way I like
know
to
what you
grow.
mean.
I don't do anything
Right.
easy. Let's just be honest.
Right.
Um,
Right.
but it's a way for me to grow
Okay.
the business without it just seems scalable. That's what I'll
Yeah.
kind of leave it at.
Yeah, no, I think that's perfect. And I'm really glad you mentioned the profitability thing. I'm not going to harp on it too much today, but you and I have, of course, talked about this in the past, because that is a piece, especially as you grow it, that I want to make sure, number one, I want to make sure you're growing something that is actually profitable. And if it's not, how can you make it profitable before we grow it? Because the worst thing that would happen is you grow this thing and you're just really burnt out, and it's in reality because yes, you're making lots of sales, but not necessarily lots of profits. So I'm glad you're really focused on that, and that's something to make sure
we've honed things down and made it and simplified
Perfect.
it, and actually increased the price by $15, and nobody really
Nice.
blinked an eye besides
Love
me.
it.
So
That's typically the case. And what tends to happen as we scale anyway is we get more profitable because some of those sort of fixed or initial costs obviously spread out over more people. It becomes less per person, which is great. But we also, as we scale, oftentimes spend more money on advertising, or hey, we've got 90 people, let's upgrade this, or whatever. So that's why it's really good that you're focused on profitability and continue to do that as you scale. Talk to me about why you want to get a loan or bring on a silent investor.
Well, the current space that I'm in is probably for sale. He's mentioned it a couple times. And we honestly what we're doing right now is not sustainable in the kitchen that we're in. So we really need a bigger kitchen, and more as we go up to a different level, it just requires more infrastructure. So
so the money would be to get a different space
and build out a kitchen and an infrastructure that would really support us for the longer run. Right now we're on top of each other, so it's not
that makes sense.
Efficient use of space. Plus, with the brick and mortar section of the business, we still had a killer year having people just come into the shop. So that just kind of runs itself. So that's running itself and paying for itself. And the CSA is everything is paying for itself plus some. So
good. I'm really glad to hear that. So about how much money are you thinking you want to get in terms of a loan or an investor? Like what kind of money are we talking about here? Or do you not know?
So what I kind of know. I know rough numbers, but I'm at the point where I need to like really hone it down to see what the affordability would be for me, like to make sure that I'm not overextending. I'm not really a risk taker. It's like I have to be busting out at the seams, or something has to be amazing come up. But I really feel as I step into this new level that I really want to kind of have ownership of it, versus like, we're just like renting versus owning. And have a chance to really develop things that I would want to have.
Okay, so you're actually talking about buying a space.
Yes.
Okay.
Yeah.
Got it. Well, and that makes a difference, right? Because if you buy a space, you're buying an asset that is used to secure that. If we're doing a loan, used to secure that loan, versus going into a bank and saying, "Give me $50, give me $50,000 so that I can go build out a space that you're renting." Right. So that helps in that sense. Talk to me a little bit about, because you had asked about forecasting and growth. So it seems like there's a bit of a block, because you said trying to figure out what I need to have in place before I go ask about this loan or a silent investor. And keep in mind, those options are very different, right?
Yes.
Obviously, and just from what you've told me, if I were you, I would certainly have the conversation about a loan, even if you ultimately decide to bring on an investor, because when you bring on an investor, you're giving them ownership of the company. And while, yes, you can certainly have a silent investor where you retain control of the day-to-day decisions, you've still given someone ownership of your company. That's a much more laborious process to bring that person on And not to talk you out of it by any means, but you want to make sure it's the right fit. You want to figure out, exactly what each portion of your business is worth, to decide how much they get for how much they give. There's management of that relationship. They're going to want to know how their investment is doing. And so there are pros and cons to that relationship. Keep in mind, an investor wants their money back. That's ultimately their goal. Now, there are some investors who will take a longer term approach, but the biggest question an investor is going to ask you is, how am I going to get my money back plus my return? How am I going to get my money back? So if you're saying, if you don't have a good answer for that, then that's going to be the first thing you need to do, is figure out what that timeline looks like for them to get their money back plus a return, because that's why they're in this thing. A loan, on the other hand, the benefit there is you're not tied to that investor relationship. So every decision you make, while depending on the loan and the terms of it, yes, there might be some requirements there with the bank, especially if you're buying property. But for the most part, you're still making the decisions for the business. And so you're less tied to, well, what does this other person think? Because that person hasn't invested into the business. So with a loan, as long as you're making the payments, and again, there might be some covenants in the loan that say you can't do this or you can't do that. But generally speaking, as long as you're making the payments, you don't have to worry too much about that relationship. Does that all make sense?
Yes.
So,
yeah.
Okay, perfect. So the only downside, I say sort of only downside, I'm doing like air quotes, is that you're paying interest on a loan, right? But remember, that interest is deductible for tax purposes. It's a business expense. So, even though it is an additional cost, I think it's worth looking into a loan because it leaves you less encumbered by this kind of investor type relationship.
Okay. I think and this is where I'm such a newbie. So when somebody approaches you to invest in your business, is it partially just because they see it and they have, why would you invest in somebody's business? Is it really for that return? Because they're seeing something they like?
Yeah. Usually, you might get, and I won't go too far down the rabbit hole of explaining different types of investors, but you might get sort of the kind of the entry level investor they tend to be what we call angel investors, $0 to $100,000 that they're going to put in. So it's not a huge amount of money. And I will say, from what I've seen, those folks tend to care a little bit more about the passion side of it. But they're still looking for a good return. Like they're still choosing to invest their money. They're not donating. So whether, no matter where you're looking kind of on the investor scale, that's the question that they're going to ask. Number one, they want to know it is a good investment. So kind of maybe to answer your original question, they're going to want to see two things. They're going to want to see your historical financial numbers, but they're also going to want to see financial projections. And a big piece of that financial projection is how they're going to get their money back. So you get your money back in one of two ways. Either the business gets sold, one of three ways. The business gets sold, which I don't think you want to do. The business goes public, which again, not really probably what you're going to do. Or you basically create a schedule where you essentially are paying them dividends over a period of time and essentially returning their contribution. So, so that to where you would say, you'll get 10% back in the first year and 20% in the second year. I'm making this up. You can do whatever you want, but you kind of set something like that. And then they would build on a percentage of a return, so we're going to pay you back up to 200% of your investment, or so, it's not over a period of 5 years. And then once we do that, you've phased out of the company basically.
Okay.
Because that gives them an end point, right? Like, okay, this is how I get my money back. Because if you're not going to sell, then I'm not going to get my money back unless there's some other mechanism to give me that money. Does that make sense?
Yeah, it does.
Now, has someone approached you about the business?
Yeah, but it's more of an angel. It's honestly, it's like 3 friends have come in the last during COVID, who just, it's kind of that angel. They're more, and they more just want to make sure I stay relevant. And I'm like, no, we're doing fine. And they're like, yeah, but is this really, you're going to be able to stay in business after this, or if things change? So it's like that feeling of they want to give you money so that you can succeed, because I know that this is all kind of a bubble for us. At least that's what my brain tells me. But that's like fear-based mentality also. So
no, that's okay. So given what you've just told me now, the other thing I will say about investors is there are rules about who can invest money and how much. And there's a concept called a qualified investor. I'm not going to go into all of that, but you could get tripped up on that with what you're talking about. So here's actually an interesting option for you. If those friends really do want to help, and if you did want to go this route, I have not personally tried this. This has come across my radar in the last couple of months, and it looks really cool. And I love the idea. So it's a company called Mainvest, MAINVEST, and I'm going to drop it in the comments for everyone here. It's mainvest.com, very simple. And the concept is that they enable regular people to invest in what they call Main Street, not Wall Street. So it's investing in retail and brick and mortar businesses. So this could be like a really good option for you potentially. And I'll let you go to the site later and check it out and let me know if you have questions. But basically, businesses will kind of post, like I'm going to share my screen real fast just so folks can see this. Give me 1 second. Okay, so they're like, and let me zoom in a little bit. So here's a business here. This is a wellness bakery and food manufacturer in Brooklyn, New York. So they are looking for working capital so that they can launch the second phase of their business. So, and they've put here, if y'all can kind of see over here on the right, they've basically put what sort of the return will be. So this is the investment multiple is 1.5 times for the next 20 or 19,900 invested. And so basically, if you can see the little thing I hovered over, it says the business stops sharing their revenue after you have been repaid a multiple of your original investment. So this business is saying the multiple will give you is 1.5%. So using their example here, if you invest $10,000 and the investment multiple is 1.55 times, then you will get repaid up to $15,000. And then after that, you're done. You're good. And the minimum investment is pretty small, $100. What's cool about this option is it actually allows you to go beyond just the couple of people you've talked about. So if you've got this really super engaged community, this is a cool way to say, hey, do you want to be a part of what we're doing here? And as you can see with these guys, I mean, I could invest $100. So I don't need to throw in 10 grand or 20 grand or, some huge amount. So I like something like this for you if you decide to go the investor route, because not only does this allow the folks you talked about to help you out, but it also potentially expands this opportunity to other people as well in your community who may really buy into your mission and believe in what you're doing. So this is something I would... Go ahead, please.
Okay. Oh, no, I was just going to say that sounds less intimidating to me. It's almost like a crowd fundraiser. It's like one of those things where I'm like, I don't really need a crowd fundraiser, nor do I want to do all of that level of work, but I don't have enough working capital. If I buy like I've done the numbers, like I don't have enough if I buy the building and, like it's just it's a big chunk of money. So,
and what you could do now, you'd have to talk to the bank about this and kind of think about how this all works, is you could actually, I don't know why I just said actually, you could actually almost do both. So maybe it's that you go to the bank and you get that loan but then you also do something like this. I mean, you have to kind of look at your numbers and see what makes sense. The other thing, just real fast before I close this out, that I like about this, and again, I have not worked with them yet, so I'm not fully endorsing them, but so far what I've seen is pretty cool. Is it seems like, so there are some required filings that you've got to do when you take on investors and things like that. It seems like they assist with that, which I like, because that can be the overwhelming part, and also, by the way, expensive part of having investors. My husband literally does this for his job. He's a corporate attorney. And so that can be the challenging piece of investors. So I check this out. Let me know what you think. If you decide to go down this route, I'd love to kind of hear how your experience is. But this is a great option from what I've seen so far. And also, by the way, for anyone watching who wants to invest in small businesses, I've actually looked at possibly doing this myself, because I love the idea. I love the idea that I can invest my money in other small businesses versus putting it in big funds that are Wall Street run. So, so check that out. But in terms of what you need, so here's what I would get together if you don't already have it, is I would get together your financials for 2020. And when I say financials, I mean your income or profit and loss reports. And I would almost do it on a monthly basis. Most accounting softwares can kind of print that out for you. I would also put together projections for maybe the next couple of years. And essentially what you're going to do is you're going to look at, well, what do I think my revenues are going to be every month? And what do I think my expenses are going to be? And because you're talking about buying a building, factor in the monthly mortgage payment. And you can usually figure that out. Go to just Google mortgage calculator. Factor that into those projections, because the bank is going to want to see that you can afford those payments on an ongoing basis. And so that's where I would start. And then I would take that to do you already have a relationship with a local bank? I'm assuming wherever you bank. Yeah. Perfect. So I would take that to them and I would say, here's the deal. I'm a small business owner. I'd like to purchase a property. Here's what I've got, and have that initial conversation with them and see what they say. And if they're good, which most loan officers are good, they're going to say to you either, yep, you're good. Let's do it. You're ready to go. Or they're going to say, okay, here's what we need in addition in terms of documentation. And if there are any reasons why they don't feel comfortable doing the loan at that point, they'll also say, here's what you need to do so that we get to a place where we feel comfortable.
Gotcha.
That makes sense. Now, the other option I want to suggest to you is, and let me pull up the website real fast, is a loan through the SBA, which is the Small Business Administration. It's a federal organization. And I'm just trying to find the right, bear with me a second. I'm trying to find the right page for you. They're the ones that you may have heard being talked about quite a lot this last year with the PPP loan program and the EIDL loan program because of COVID. But they also do, just on a normal basis, they do small business loans. And so, here, I'm going to just send you this main overview page. They have a couple of different types of loans. They've got what are called 504 loans, which are probably what you would look at, where you essentially borrow money to purchase real estate or purchase assets. And so they can be great because not only do they tend to have fairly favorable terms, and they're set up by the government with the goal of helping small businesses, so they tend to be easier to get. But they also can offer counseling to tell you, here's what we need to get you approved.
Okay.
So that is where I would start with those two places. I would look at Mainvest because I think that could be a really good option for you if you want to go that investor route. But I would also look at the SBA and have a conversation with them about what that loan looks like. And they actually have a ton of info. I'm just on their website right now. They have a ton of info about the 504 loan program anyway. So you may get some information there to get started. but I would do that too. And I would have, well, and I would also go to your bank. I guess I would do all three things. Because your bank may be able to offer you something favorable. And again, if not the SBA, but I will say, don't just go to your bank and then call it a day. Also look at the SBA, because the loans that they offer often have like favorable repayment options or provisions if like for forgiveness and things like that, if there's ever an issue. So sometimes you end up getting kind of a better long-term loan benefits with the SBA than you will with just a bank.
Okay. Just a side note, I did get an EIDL loan.
Yep. Okay. Okay.
That I haven't been using, and I don't honestly know. I just kind of tucked it away.
Okay.
Because who the heck knows what's going to happen in the next 6 months?
Yep.
So and that's another factor that I'm just like, it's sitting there. I know that there's qualifications on using it. So I think I just need to, if you have a resource of like, I know how to use, like how I can use it, but I'm like, if I'm profitable, how are they going to check up on me? Like, I feel nervous.
So, I get it. Don't worry. I have one too. So trust me, I know all about them. So a couple of things. So first and foremost, it's okay if you're profitable. They're not going to like come back and like steal the money back. But you are correct that you have to use that for specific things. So because that is an emergency loan, it essentially has to be used for expenses that need to have been paid to kind of get through the emergency. So you can't use that to buy a new building, for example. You can't use that to invest in new assets for the business. Like anything that would sort of grow the business that's not really the intent of the money. The money is really intended to pay the expenses you currently have when you're in the disaster, which is COVID in this case, so that you can kind of get by. So what I would say is, and this is a great question to ask the SBA, because you can call them and talk to them, is you can say, I took out this loan. What happens if I want to get a 504 loan? Do I need to have paid off I actually don't know off the top of my head. Do I need to have paid off the EIDL? Because they do have rules about how many different SBA loans you can have out, and also rules about whether or not you can use SBA loan funds. So for example, EIDL funds to pay other SBA loans. So one of the things they might say is, yep, you can keep the EIDL, but you can't use those funds to pay your 504 loan for your business or for your building. Or they may say, no, you've got to repay the EIDL, which in your case, because you haven't spent the money, you may just want to go ahead and do, and then, separately kind of get your working capital cash from whatever loan you're going to get, whether it's SBA or your bank. The most important thing for folks to know about the EIDL is when you have those funds, keeping them separate if you can. If they can't be in a separate bank account, at least keeping kind of a separate, and it can be in Excel, it doesn't have to be fancy, but at least keeping kind of a separate running total of how those funds get spent, so that if you do get audited by the SBA, you can say, nope, I got 10 grand and this is how we spent the money, and here's how much we have left.
Okay. Yeah.
Does that make sense? Okay.
Because I was like, because I didn't know if I should be using it to pay expenses and kind of keeping the profit for the bigger part of the business, for this other part. So it's a big question. So
it's a big question, and it's kind of, you're not alone in this. This happened to me too. It happened to a bunch of other people, where you basically took the money out because it was like, oh shit, get the money. And then all of a sudden it's like, oh, okay, I'm actually okay. What do I do now?
I mean, I thought we'd have to close. So that's what my brain said.
Yeah. So this is kind of a tricky one, where and to your point, like we're still in this, right? So it's not like the pandemic's over and you can honestly say, I'm never going to need this money. I mean, hopefully you won't, and it doesn't sound like you will, but we're not there yet. So
Right.
you can do a couple of things. Number one, you can just literally hold on to the money. And then once we kind of get past that point where we're like, okay, COVID's over, I'm very comfortable that like COVID is not going to affect my business, then you could repay the money. Or you could go back. I don't know when you got the money, but you can go back to the point that you got the money and look at the couple of months, let's just say after that. And if you weren't bringing in, if you were spending money, but weren't necessarily bringing in a ton of profits, you could just make a list and say, so let's say you got 10 grand in, I'm making things up, but in June, and then in June, July, and August, you had, $4,000 of expenses in each of those months. You could make like an Excel sheet and just basically say, I spent my EIDL money on this, this, and this. 4,000 in June, 4,000 in July, and then 2,000 in August. As long as you have legitimate expenses in those months that those funds got spent on, and as long as all that cash was in one bank account. If you actually did separate it out, then you would obviously track it based on how you actually spent the cash.
Okay.
But I think for you, because it sounds like you're in a good spot, I would keep that money segmented for now. And I would talk to the, if you decide to go the route of the loans, I would talk to the SBA about what that means. And either end up repaying that EIDL or rolling it into a 504 or, something like that, because it doesn't sound like you need those EIDL funds right now.
Yeah, we're still open. And with the CSA, it's just kind of bolstered us up that I know I can cover my bills, which is the first time I've ever been able to do that. So
yay.
Good. Yeah.
But you can cover them not because of the EIDL funds, right? Because of everything else from the CSA.
Yeah.
Right. Okay, perfect. So if I were you, I would keep those EIDL funds kind of segmented, even if it's only on paper segmented, even if it's all in the same account, keep them segmented for now. So that way you have the most flexibility. If you, if you talk to the SBA and they say, you got to pay that back before we can do a 504, then at least you've got those funds that you can pay back. So,
okay.
Cool. All right. What else? What other questions?
I think, are you asking me?
Yeah.
Okay.
You're the only one here.
Oh, I am. Okay. Well,
it's your hot seat, my friends.
Yeah, exactly. So one of my, and this is where I struggle, because it's like, I don't want to be greedy, and I'm trying to scale up a physical product.
Yeah.
How would you, because, for me, it's all about the individual, like, connection. Sorry, I'm just basically trying to say is, when I talk to my people, my helpers that are working with me, and I say, okay, our goal for next time is 150 with like a high goal of 200. And they know the numbers, like they know it's going to be, that's $30,000, which is a lot of money. And they go, oh, that's way too much. Like they have this mentality of, oh, it's just going to be too much work. And I'm like, okay, well, obviously we'd have to get a new space. Like we'd have to really, so like, I'm trying to create a vision for them that says, if we do XYZ, one, I can give you, I know I can pay you, I know I can pay you as an employee. I can pay you with healthcare. I can give you a better, higher wage, like creating that vision for them, because it's that small, it's not small. It's just the way they've always lived. So it's that shifting of the business culture of, and I'm struggling with this too, because I'm like, who do you think you are that you can sell 200 of these? Like, that's nuts. Like, well, $30,000 a quarter, that's nuts. Like, but at the same time, I'm like, but I could, it's like so basic to me that I'm like, if we can do this, and it's still, it feels in integrity. and I get to pay you more, and I
Yeah.
get to, like,
Yeah.
so that's where I'm struggling with that, because I can see it, um, but that leading it down and trickling it down into because I have to hire a new person
Right.
to help me with this. But how do you suggest?
Yeah, well, you said something at the beginning, which I think is a good reminder for you and for your people, which is that you're creating this community, and that this really has this impact on people. And
Mhm.
that's what I would, every time I'm talking about those numbers, I would be talking about not, our goal is to sell 150 or 200 and then we'll make 30 grand, but I would be saying, we want to go from 90 to 200 people that we're serving, that we're
Mhm.
impacting with this important product, with this important offer. I would really make sure that anytime you're talking about what you do, that you're talking about it in those terms, about the impact
Mhm.
that it has. And I think just kind of shifting that mentality will make that become part of your culture over time.
Okay.
Um, the other thing you might want to consider, and I'm not saying you have to do this, and this is a personality thing, so it'll depend on your people, but could you actually consider making a portion of their compensation based on how many people? I don't know if they're part of the sales process at all, but even if they're not, just even shifting a portion of it to the number you bring in. Now, I want to be super clear. If you do this, I want to make sure whatever the base you pay them is a livable wage, so that you're paying them,
Right.
a good wage already. But is there a
Mhm.
way to incentivize them? And maybe it's not money, maybe it's you know, I don't know, a paid day off, or maybe, I mean, that is money, but something that would incentivize them. Hey, if we hit 150, we're going to do X. If we hit 200, we're going to do this. So
Mhm.
that they feel now that motivation to get to that number. And so uh, just thinking about how you can kind of help them be a part of that process, because even though I hear you say, I tell them if we hit that number, then I can pay them better and I can give them health insurance and all that. And those things are great. Those are good incentives. But it might be hard. It might be it might be a bit of a disconnect for them, because what they may be hearing is, if we hit 150 or 200, she makes 30 grand. And yeah,
Right.
then there's like a trickle effect of we get something, but that's harder for people to kind of emotionally feel that connection when it's
Yeah.
indirect. So if you can make a direct connection, if we hit 150, y'all are going to get, I don't know what would matter to them, but a paid day off or whatever, emotionally, they might be more connected to that outcome.
Okay.
Does that make sense?
Yeah,
Um,
it does. I
okay.
can't it's like what motivates people. I
Yeah.
don't I don't know how everyone motivates. So for
And
me, it's
everybody's
like,
different. And you can ask. You can ask. Like,
yeah.
you know, for some people, it's their work environment. So I know you're not a corporate setting, so this doesn't totally apply. But for some people, they're motivated by free snacks and free drinks and, a pool table in the break room. Other people are motivated by health insurance and, I don't know, retirement contributions and things like that. Like, that's what does it for me. If you tell me you're going to put money in my retirement, I'm like, woo, I'm all in. But
Yeah.
everybody's different. So have a conversation, and because even something like paying them more money, maybe they feel good about what you're paying them. Not that they
Yeah.
don't want more money, but if they're not feeling underpaid,
Mhm.
or if they're not feeling pinched financially, then telling them you're going to pay them more money, that just may not be their love language. That may not be what's going to really get to them emotionally. So you've
Okay.
got to kind of talk to them about that. The other thing that I wanted to just touch on, because you mentioned it, and I want to be very clear, I'm not calling you out here. This is something that everybody does, is this distinction of a contractor versus an employee, because you're paying your people as contractors right now, right? Is that right?
Yes, right now.
Okay. Yep.
But wanting to shift quickly.
Yep. Yeah. Well, and I know we've talked about this before. So again, this is more for the audience and less for you specifically.
Yeah.
But I just want to remind everyone that the difference between a contractor and an employee is not what you pay them. It's not a choice that you make. It is dependent on how they act and how they are treated. So if someone is offering their services to your business, but they have full control over their work, they're providing the tools and the materials, they're setting the pricing of what you pay them, that is more, you don't have day-to-day oversight of that person. That is more likely a contractor. If they're coming to your place of business to do their work, if you oversee them, if you supervise what they're doing, you tell them how to do it, if you're training them, if you're providing the tools and materials, then that is more likely an employee. And the biggest difference between a contractor and an employee is with a contractor, we don't withhold and we don't have to pay payroll taxes for them on their behalf. With an employee, we do. So I just want to put that out there because this is an area that is very misunderstood. And unfortunately, if you misclassify an employee, so you treat them as a contractor, but they're really an employee, and you get caught, the IRS catches you, it can actually be very expensive because they will go back and make you pay back payroll taxes, plus interest, plus fines. So I would recommend to you that you, sooner than later, get your people set up as employees. It's going to cost you. You're going to have to pay those payroll taxes. But I think it sounds to me like that's who your people are, or that's what your people are. And it's a liability for you not treating them as employees.
Yeah. And that's something that it was been really, really interesting, because when I asked them, they're like, "Oh no, I'm fine." And then I'm just like, my accountant was like, "They're fine. They're under a certain number." And now that I've been using them for, like we're hitting that, it just feels so uncomfortable to me, because I'm like, this is too much. It's just too much. So, and
for what it's worth, not to call out your accountant, but I'm kind of going to, there's not a number threshold. I just want to be very clear, like for folks listening, there's not a number threshold. Now, what your accountant was probably alluding to is there's a risk level here, right? And, when it's not that many people and it's not that much money and it's not that often, your risk, and your potential consequences lower. But let's be clear, like there's no dollar threshold here. They're either an employee or they're a contractor, no matter what they make. So for you, I would recommend getting them set up as employees sooner than later, so that you can, especially as you're growing the business and now you're making some real money, so that you don't have that liability anymore.
Yeah, for sure. And that's on my fun list to do. So
sorry. Well, I will tell you this. Now, it's not a cheap solution, and you don't have to use this one, but I would recommend using a payroll solution like Gusto, Gusto, or there's a new one that keeps popping up on my Facebook feed. I haven't tried it, but it looks pretty cool. So frankly, just yell, "I need a payroll solution" into the void, and Facebook will start showing you a bunch, I'm sure. But I would recommend doing that, because it's yes, it'll have a monthly fee. It's going to cost you some money, but it's going to totally simplify the process, because like with Gusto, it's got a whole onboarding thing. So it makes sure that you've got all the documents you need for each employee. It runs the pay. You have to press the button, but however often, but it runs the payroll. It takes the money out. It puts the payroll taxes aside. It pays them into your state and into the federal government. It just handles everything. And also, what do you use what's your accounting? Are you on QuickBooks, right?
I use Bench.
Oh, you use Bench. Okay, so actually,
I do not want to anytime I can simplify, I am all for it.
Yes, no, that's totally fine. I don't think they do payroll yet, do they? Yeah, they don't.
They recommend Gusto, and honestly, Gusto never got back to me. So,
oh no,
it was like one of those things where they never, because I didn't buy their upgraded, so I didn't want their up. It was weird. It was a very weird experience. So.
Okay, I'm sorry. I'm sorry about that.
That's okay. No.
Because I do recommend Gusto. I like them. They're a little bit pricier than some other solutions, but I like them because they do everything, and they're very. I've just never had a, knock on wood, I've never had an issue with them. But whether you use them or someone else, I would recommend spending that little bit of extra money to do that, because knowing you, but even just everybody, you've got too much to focus on right now to be worrying about payroll. So
yeah. Yeah,
That would be my
for
recommendation.
sure. Thank
Okay.
you.
We have 5 more minutes. Any other questions?
What do I do with profits? Like, do I put them into a higher yield saving account? I don't know. I mean, it's
Yeah.
it's like when I look at my bank account between the EDIL and the
Mhm.
profits, I'm just like, that's a lot of money that shouldn't just be. It just feels weird that it's sitting there.
Yeah.
So
First of all, how great does it feel to ask that question? Like, how cool is that?
amazing. And I've been paying myself. I looked at our pay. I go, oh my
Yes.
god, I'm making more than my husband. So it's so weird
Yes.
to me.
I'm so glad. I'm
So
so glad that I'm beaming. It's a great question. So, a couple of things. First and foremost, you want to make sure, number one, that you're paying yourself, which I heard you say you are, which is great. Number two, setting money aside for taxes. So you can do this. What bank do you have?
I use a local bank right now,
Local.
but I was
Okay.
going to move it
Okay.
to Ally Financial. But so long story short, I'm trying to try to sort it all out so that it's
Okay.
I was trying to do profit first, but then I realized I am not it's a little too complicated for my world.
Yeah, I'm not a huge fan of profit first. That's one of the reasons. I actually now have a question for you, and you can get back to me on this. Does Ally actually do business checking accounts? Because I have another client, we've been trying, she wanted to do Ally, and we could not find a business checking account with them. So you'll have to tell me.
Oh, it's Axos. Axos is the one.
Oh, okay. Okay. Okay.
Yeah.
Okay.
Sorry, Ally has a business savings account. Yeah.
That's okay. That's why I was like, oh, wow, that's really good to know if Ally does now have a business checking account. Yeah. So whether you stay with your bank or you move, the reason I asked was some banks have what they call the envelope system or reserves or whatever, which is basically created so that you could do a profit first type thing if you wanted to. I'm not recommending that you do, at least not to the extent Profit First does it. But I highly recommend having a separate account or envelope for tax savings so that money is separate. I also so once I've got my tax savings account, that's like number one priority after you're paying yourself. The next priority I would say would be emergency savings. And I have set a goal in my own business, and I think this is a good goal for everyone, of having 6 months of expenses in that account. Now, to be clear, you're not going to probably be there tomorrow, and that's okay. If it takes you 2 years to get there, that's okay. But figure out what 6 months of expenses would be on average, and then decide how long you want to take to get there, and then figure out what you can put aside every month to get there. This is you get hit by a bus money. You can't work for 6 months, so you can keep the business afloat. This is frankly what we all need to do so that the next time, hopefully it never happens, but something like COVID happens, we've got the funds there. So we can do what we need to do and not have to worry about the business. So that would be the next level. And then the third, and that money, by the way, you should, wherever you decide to put that, you should keep that in a fairly safe account. So it can be interest bearing. I think that's a great idea, but I wouldn't go invest that in the stock market. I'd want to keep that money like fairly safe and easily accessible.
Okay.
Then the next level would be sort of doing something bigger with the money. And actually for you, what I would recommend is looking at a retirement account. Now, this is a big conversation, and there are going to be a few different options. And what ends up happening with retirement accounts for small business owners is there are options that if we have employees, we have to think about, because certain retirement account options, if we do have employees, we have to put the same amount percentage-wise in their account, so we put in ours. Like there are some rules like that depending on the type. So this is a bigger conversation, and actually feel free when you get to this point, if you want to come back, we can have this conversation. It's something I just went through in my own business, because you also want to look a little bit long-term too and say, like, where do I think my business is going? But a retirement account is a great option for you, because depending on the type you set up, the money you put into it could be put in tax-free, meaning you don't have to pay taxes on those funds until you distribute years from now. So I like that idea for extra profits because it's a great way to defer that tax hit and also save money. And depending on the portfolio you choose, you can be more aggressive or less aggressive. You could actually be making some significant money that'll help you down the road when you do retire. So that's my recommendation. And then like, if you did max out how much you can do at that level, then I would invest in something that isn't retirement specific and is, has a higher interest rate or potential return. But that would be kind of that fourth level: tax savings, emergency savings, retirement, then kind of general investing is what I would do. So does that make sense?
Yeah, it makes sense. And I look forward to getting to that point.
The thing I've said about like even something like retirement is, even if you can't max out or you don't have that much money to put into it right now, get the account set up and just start getting in that habit. You and I talked about this with paying yourself, getting in the habit of doing it. It's the same thing with emergency savings. It's the same thing with tax savings, and then certainly with retirement. Get in the habit of putting money in there on a regular basis, even if it's a small amount of money, because you're just starting that habit, and that comes a part of your process. So,
yeah. Thank you.
Awesome. You're so welcome.
Super helpful. It's like one of those things where every time I talk to you, I feel like I have the confidence to like step into it versus like scared in my mind. So thank you.
Well, because you can do this. Yeah. I know it feels overwhelming, but honest, I'm actually really excited for you. And if you decide to go with MainVest, let me know, because I really want to hear how that is.
Sure.
Because I'm excited about that possibility for small business owners. So. Yeah,
I think it's a great possibility, because so many people want to invest in their hometowns and where they are.
Right.
So it's like, why not put your money there versus somewhere else? So
absolutely. I like I told you, I was looking at it for myself because I love the idea of supporting the businesses around me. So yeah, I love it.
Great.
Very cool. All right, my friend. Well, thank you so much for coming to the hot seat today. I'm glad this was helpful. And for everyone else watching, we do hot seats the third week of every month. So we will be back here again at the end of late middle February for another one. So hope everyone has a great day, and I will see you all in February. Bye.